Hello, everyone. Welcome to this recording on behalf of ESS BIZTOOLS. We seem to have a... Today's theme is Know Your SME's Worth, Charge Out Rates That Work. Let's just go through it and understand how all this fits together from a business point of view. I'm Peter Towers, founder and managing director of ESS BIZTOOLS. There's a lot of pressure on our SME clients to stay competitive. And some of the contributors to this are, first of all, it applies to all SMEs. Businesses need to win work, keep customers happy, and still make a profit. So do accountancy firms and bookkeeping firms. Every one of us, except probably the government agencies. But all too often, pricing's built on guesswork rather than strategy. And this is what I want to demonstrate to you today, how the ESS BIZTOOLS system can assist. The result, businesses quietly bleed cash if they haven't gone about the establishment of the charge out rates in a business-like manner. And to do that, they will need your assistance as accountants or bookkeepers. This is part of the trusted advisor role for accountants and bookkeepers. That's definitely created some interest in the last few days, late last week, where an article was published in Accountants Daily, which was headed Accountants Not Seen as Strategic Partners by Small Businesses. Came as a bit of a shock for some accountants. It's worth reading to understand what the results of a detailed survey were that looked at this whole concept of trusted advisor services. What I would like to make clear to you is, from an ESS Biz point of view, we definitely support the concept that accountants should aspire for the trusted advisor status. But I accept that many, many firms throughout Australia do not meet that requirement at this stage. And I hope that with our contributions, we'll be able to assist you to achieve that status of delivery of services to your clients. And one of the most important concepts or presentations that was made about the advisory services was, of course, the former tax commissioner, Chris Jordan, who nearly 3 years ago, in fact, the anniversary is on the 8th of September, he delivered a powerful presentation at Xerocon 2022, which I would like to just read to you to set the scene as to why we have developed the charge out rate calculator for use by tradies and a similar product for use by professional services firms, which obviously includes accountants, bookkeepers, lawyers, and a whole range of other professional services firms. Chris Jordan, who was a former partner of KPMG, so he understands accountants, made this comment at the end of his overview of the taxation officer's vision for the future, which was really taking him through to the end of this decade. And he said, "You must understand that if your business model is high volume, low margin, simple tax returns, your business will not be viable in 3 to 5 years." You could now look at that in saying 2 weeks to 2 years, because the 3-year period is nearly expired. Jordan went on to say you should be looking to diversify to remain viable longer term. He also went on to say, focus on becoming a brilliant and trusted advisor. My interpretation of what Chris Jordan had to say that day is in two groups. Number one, he was talking to accountants and bookkeepers who were servicing wage earner, salary earner, very small SMEs when he told them that their business model might be going to change. But then later on, I think he was talking to the entire accounting and bookkeeping industry who are advising, supporting SMEs, that the accounting, bookkeeping role needs to be along the lines of becoming a brilliant and trusted advisor. I hope that this presentation will help you think about that as we try to assist SMEs so that their business is not something that's quietly bleeding cash, that you are able to give them advice which will help them on the journey. The hidden cost of guesswork in the charge-out rates, it's there because pricing what they think their competitors charge can be very incorrect. Do they know how well their competitors trading? Do they know the cost structure of their competitors' business? Do they know the productivity percentage their competitors obtaining from their work? Incidentally, if any of our viewers today have got any questions, can you please just send it through chat and I'll try to answer it later in the webinar. If you're watching this on the live feed, which we have for social media, and you have a question, you won't be able to just log on, I'm afraid. Can you send me an email, peter@essbiztools.com.au. And if you're watching this at a later time, which was more suitable for you, because we've sent the recording to you, you'll have to just send me an email if you have questions, please, peter@essbiztools.com.au. So how do your clients set their pricing? Do you ask them? Do you have this conversation? There was an interesting follow-up from the original article that appeared in Accountants Daily on the 19th of August that I referred to before. And that was yesterday, where an article was published that referred to the overall debate on the trusted advisor myth. And in that article, the writer indicated that one of the real problems with accountants was not having conversations with clients, sitting down and talking to them, not rushing the position, but starting to talk and follow through with them and listen to what their concerns are. So my original question was, how does your client set the charge-out rates? Do you assist them? Do you analyse how they decided on their charge-out rates? Or do they take last year's figure, which might have been wrong in any case, and just add a percentage? What was the result of last year? What's their profit and loss account indicate? If they're undercharging, this chips away at their margins, chips away at their ability to do other things like scale up their business or undertake research and development. And overcharging, of course, can be as bad because that potentially alienates loyal customers who move on to someone else. So failure to review charge-out rates, at least annually, can cause problems. And this goes right to the heart of this debate that's now broken out in Australian accounting circles. What really does trusted advisor mean? Are we talking to our clients and understanding what they really want? And next week, we're going to be following through on this theme of really looking at what the trusted advisor story really is. A lot of people say they supply it, but are we really supplying it? And we'll be analysing some of the articles that have started to appear and some of the comments that are now on Accountants Daily. The result of all this is a business that works hard struggles to generate sustainable profits if they're not assisted. It's a hard innings to put together, hard challenge. If your client was a little bit larger, they'd probably have a full-time accountant working for them, wouldn't they? Now, that full-time accountant is just not going to sit there and prepare a profit and loss account and a balance sheet and probably pay the bills and check the postings in the general ledgers. There's a lot more work that goes on, obviously. And a lot of that is the analysis of key performance indicators. It's the analysis of how charge-out rates are determined. And it's then the monitoring of what occurs. And this is the model that I want to develop today for you to think about. So why charge-out rates matter? It covers the true cost of running the business. It's at least an annual think tank within the client's firm and with you helping them. Please, I think that's the key message I want to give you. To set charge-out rates which will earn their targeted profit. So the margin is needed to achieve growth targets, whatever they are, that your client has, their aspirations for the business. So what's your role as a trusted advisor in all of this? SMEs need you to assist them on the commercial business matters, not just taxation. Now, I know some firms are actively doing this. Some of them are our members, subscribers, and that's wonderful. And they're getting great results. But unfortunately, we've got very high failure rates in small business. The Ombudsman claims it's the highest ever. Failure rates affecting small businesses. So I think we need to face up to the reality that there's a lot of problems. SMEs need your assistance as their trusted advisor because you can help them make smarter, more strategic decisions as to which way they should go. And as I said at the beginning of this conversation today, I think we need all of us to sit down and listen to our clients, have a conversation. Andrew Geddes, one of the founders of the Financial Management Research Centre, has spoken a number of times in our webinar presentations and our podcast presentations. And he is a strong advocate for the concept of making an appointment with the client at their premises and going out there to have a cup of tea or coffee or perhaps something a wee bit stronger if it's a bit later in the day, and encourage the client to talk about issues. That's why the SME needs analysis is such an important document. It was originally developed by Geddes at Financial Management Research Centre. Andrew agreed that we could modify it, and we have done that with some of his input and some of ours and some of our subscribers over the years. And basically what that document is a checklist of matters that you might just bring up in the conversation to ask the client. Are they happy with their gross profit percentage? Are they happy with their average sale? Do they have any cash flow problems? When are they planning to retire? Are they happy with their team? Does the leadership team need some additional training? Do they understand corporate governance? These are the sort of issues that can get the client talking and indicating to you what really they would like you to do or someone to do to fix it for them. And this will help your client to be making smarter, more strategic decisions based on your input, your advice. It's not just taxation. understanding the key performance indicators. I was flabbergasted a few years ago when at a public conference that I was presenting at on directors' duties with about 45 people in the audience in a regional mining community. A lady asked me, when we talked about directors' duties and responsibilities, we touched on debtors. Directors should understand how the debtor system was determined and know the very important debtors' days outstanding figure. This lady asked me, what's debtors' days outstanding mean? So I tried to explain that very quickly, and I said, well, I've told you that now, and you might call it something different, but what do you think yours is? She said, I've got no idea. I don't know what it is. It was just on morning tea, so I could see the caterers down the back were getting ready. So I said, let's have a morning tea break now. So I went and talked to the lady. And she told me their turnover and the balance of the debtors ledger. She knew that. And I did a calculation. And she must have seen my face, because the figure that came out was 102 days, debtors' days outstanding, an SME business with a turnover between $8 and $10 million, 102 days. I was very surprised. I said, who's your accountant? And she rapped off a name. I actually knew that particular gentleman. And I said, well, what's he say when he gives you the annual account? She said, oh, he's very, very straight with us that he's only there to do the tax return. I happened to run into that guy a couple of weeks later. Very surprised who you can run into at times. And I said to him, oh, I met one of your clients the other day. He said, yeah, I heard that. I heard you had a good discussion with them. They understand corporate governance a bit more now. I said, I was rather surprised they had no idea of debtors' days outstanding. He said, yeah, well. And I said, haven't you ever talked to them about that? He said, Peter, that's not my role. I'm there to prepare the tax return. I was a bit taken back, to be honest. I still am. Please think about it. Surely understanding and talking to your clients about the very fundamental key performance indicators that emerge in a business is important information to convey to your clients. And if we want to be talked and treated as being the trusted advisors, surely we need to be communicating to clients on very important information, especially when the figure worked out at 102 days for an SME business. So ESS BIZTOOls Trades Industry Charge-Out Calculator takes the guesswork out of pricing. You still need to put the data in, but we have a similar calculator for the professional service firms. It's nearly the same as the trades. We just didn't want to call it trades. We called it something different. But we also have a setting retail price calculator, which is different, of course, because retailers are not selling their hours produced by their team members. They're trying to sell products that have got a different mixes, because they've got a whole range of products. They've got various markups, various quantities, so that they have stars, which are high quantity, high markups. They've got cash cows, which are high quantities, but low markups. They've got problem lines, which tend to be last year's fashions. Ladies wore red last year. This year they're wearing yellow. Very difficult to sell last year's products at the same markup that they would have earned last year. And then we got the ones that no one owns up to, the real problem areas that no one admits that they ever purchased it. Just be aware of automatic reorder programs on computer programs, because I've seen that can cause some real problems, whereby someone's worked very hard, the whole team's worked very hard to clear a particular stock item. No sooner do they nearly get rid of it all, they've got one or two left, and suddenly a whole new batch turns up. And when you investigate, the reason is when it got down to the final 3 items, the system automatically reordered. And I happened to be in a client's boardroom one day and heard the outburst of a retail shop manager had come into the office to find out who the so-and-so was that ordered this stock that he'd taken 2.5 to 3 years to get rid of. And suddenly he's got a whole stack of it back again. He was far from impressed. So we're now going to link to the ESS BIZTOOLS website so that I can just show you how all of this links together in the product package which we have produced. So I'm on our website now. We have a full display. We've got 3 major product packages. A SME Success Accelerating Package, that's primarily targeted bookkeepers who are just going into advisory services for the first time. The Advanced Business Advisory Package, designed for accountants, but the real package is the Financial Forecasting Package, which will give you the resources to deliver a virtual Chief Financial Officer service to your clients. The contents of package 1 rolled into package 2, and more is added there, of course. And then package 2 is added into what becomes package 3, and a lot more information is then added. I'm just going down through the list of products, and I'm going to click on Trades Industry. And we'll just move back. We got something else come up there then. I'm going to click on download content. And this is a list of the material that's in the trades industry. And we want the example calculator, which we've prepared so you can understand how this system. Obviously, you obtain a blank calculator, which you can utilize on any number of your packages that you wish to. And I'm now going to move back to so at the very beginning on our tradie charge out rate calculator, we have just some instructions. The first area that you go to is the calculation of the labour on cost area. So the system's set up that you in fact have 36 different scenarios that you can insert on the full-time team members as to whether they have identical allocations for annual leave, shift workers allowance, statutory holidays, superannuation might vary. In this case, we've varied it, their training time, etc. So we started off, the manager was the only one that had those benefits, primarily influenced by the training time and the superannuation contribution. We then had a couple of others the same, the foreman and the office manager, and then we had some tradesmen, clerical assistants, etc. So what the system does is it goes through and looks at these various on costs within the salaries, looks at the working hours for the person, and does the calculation and decides that for this manager, the on-cost percentage is actually 22.57%. It is slightly different for the next group, which is 21.51, and so on. And we've got other calculations. We've got a set of very similar calculations for permanent part-time employees. Just feed the data in, and then we have casual employees. So that information is then transferred into the labour budget. So I'll just So the labour budget automatically transfers information across from the reference numbers that were in the labour on-cost column. You have to insert the number of individuals. So A1.1 was the manager. So there's one manager salary. You've inserted 145,000. The system then does the calculations of the labour on cost based on the 22.57%, and the working hours are transferred from the on cost calculation. So is the holiday and leave allowance that was built in. So we've got a net working time of 1634, and you have sat down and talked to the manager or the management team and decided he's 30% of his time will be able to generate chargeable hours. You've got to be a bit careful how you say that to a manager. I did have a bit of an eruption one day when we had figure like 25, I think it was, percent for that guy. And I probably didn't word it very carefully at the time. I just said, oh, that'll be all that we can achieve for him or something like that. He erupted. So just be careful. But what the system's then calculating is what's the total hours are going to be paid and what's the productivity amount, or the chargeable amount is probably a better way of putting it. And the other people have also been transferred across based on those reference numbers, which are in the labour on-cost calculations. So the same thing then happens for the part-time employees and then the casuals. So the system calculates the total amounts that for on-costs, what the total salary and on-cost figure will be, and what the chargeable hours will be. The system then calculates the business productivity, 44.54 in this example. So that's the end of the labour budget. We then move on to return on investment. Now you can insert what your client believes their business is worth and put in a targeted rate of return if you like, or you can just enter a profit figure, but we put that process so you could see that. The next thing we need to determine is the overheads. The overheads, we did used to put a sheet in there, but people had variations and wanted to put their own in. So I've just put the total, $450,000 we're saying in this hypothetical. We then look at budgeted materials. Most tradie businesses buy services or products, whether it's paint, whether it's carpet, whether it's light fittings, for clients. So one of the key questions I think you need to ask your clients when you're undertaking this exercise is how much money do you think you'll spend in the year on buying products, services to assist your clients? I've used $1 million, and then I ask, are you going to mark it up? I think the client's well and truly entitled to mark up those purchases because they have people go and find the products for their clients and get the bill, pay for it, and probably wait a little while for the client to pay them. So we've said 10%, so there's $100,000 super profit going to come out of that. And then a decision needs to be made. What are you going to do with that? Does your client want to try to hang on to that profit, or are we going to use it to subsidise the labour costs? In this example, we've used 100% of it to subsidise, but we could have had 50% to subsidise the labour costs. 50% is super profit. We're going to hang on to $50,000. We've built in write-offs. I don't like write-offs, but we've built them in 5%. So the system then calculates what's got to be generated from the sale of labour. There's the labour cost, there's the return on investment, there's the overhead expenses, there's the credit against that figure for the super profit from the markups, and there's an allowance for write-down. So the target is to earn $2.45 million from the sale of labour. The system will then do some automatic calculations. All the data is transferred across strictly in accordance with how the setup was made in the on-cost calculators. And the system just goes through the mathematical calculations to first of all do the calculation of the base time cost. Well, that's what we then go into. Sorry. And then it calculates the business overhead expenses. And at the end of that, we are getting an indicative rate of charge outs. So based on the base cost per hour for the manager was $89.94, the trade overhead factor has been calculated. It's the same for everyone, 2.76. So the exact charge out is $248.46. The system's rounded it down to $248 and others it rounds it up. So there are some rounding off variances that occur in this calculation. But they're the various charge out rates that you have now got for your clients. And then we had a proof calculation is prepared. So we're going to have sales of 1.1 million for the materials, 2.457 for labour. We've got the allowance for the write-off, so we're back to 3.4 million. The material cost, the labour and on costs. So the on costs are all brought to account. A lot of people forget them. Got a gross profit of 545. That's a margin of 16%. Overhead expenses 450. We're going to make $95,000. The target was 90,000. The 5,000 variation is round offs, and we've got a spreadsheet just to prove that for ourselves. So that's what it was. So that's the way you would go about undertaking this type of example to help you to understand this overall process. So do you want to know more? Do you need more information about how this process would work, how it could help you with your clients, how it could help you perform as a trusted advisor for your clients? You can visit our website, www.essbiztools.com.au, and click on packages and pricing, and that will give you the details of the components, the cost for the annual subscription for the three main product packages that we demonstrated to you very briefly when we started this presentation. Or you could book a complimentary Zoom meeting if you wish. Just send us an email, peter@essbiztools.com.au, and we will get back to you. So thank you very much for joining us today. Next week, we have a special presentation, which is a webinar we're presenting that's starting the analysis on the trusted advisor role for supplying of services to help your SME clients understand a whole range of financial, commercial, management, accounting issues as part of advisory services, which I hope you'll find very interesting. And then on the 10th of September, we have a very special webinar with a well-known guest presenter, where we're going to look at what's happened 3 years after Chris Jordan made that very important presentation at Xerocon 2022. The title of that presentation was "Why Tax Can't Just Happen Without You." Chris Jordan was being very complimentary to the accounting profession, which of course he was part of as a partner at KPMG, and he went through a whole summary of matters relating to the upgrading of technology and processing of data by the tax office. One matter that he did mention in his presentation that I think is very interesting, and we're going to ask that very clearly next week. What would happen to the services you're currently providing to your SME clients if the taxation office decided that because of AI and other changes that they've already made, that from next year there'll be no tax returns required to be lodged for any businesses? It's a hypothetical question, of course, but I think in light of what's happening with AI, perhaps we should start thinking about it. About 3 months ago, I participated in a very interesting series on AI, and one of the key presenters, there were 9 presenters over 2 days, is a fellow of the Institute of Chartered Accountants, now resides in London, I gather. And in about the year 2000, he decided to quit Australian accounting, where he'd been a sole practitioner, because he was finding life too tough. He went and undertook a course on value pricing, and he was very impressed. And along the way, he became involved, I gather, virtually at the beginning of AI, and is now a senior consultant to ChatGPT. In his presentation to this AI conference, he made the comment that the compliance activities that accountants and bookkeepers are currently involved in will not exist by the end of the decade. Will not exist by the end of the decade. Makes you think, doesn't it? Okay, thank you very much. If you do have any questions, please send them through to me, peter@essbiztools.com.au. Have a great day, and I look forward to talking to you again next week, where we will really delve into the overall challenge that accountants have in delivering trusted advisor services. Stay safe. Goodbye. And I look forward to talking to you then. My apology. I just saw that you couldn't see the screen.